All right, in this lesson, we're going to be taking a look at the journalization of a long-lived asset at its acquisition. We're going to take things that we've learned in the last lesson, as well as looking at an example to help you understand what that journal entry looks like when we first acquire an asset. So let's get started here with remembering some of the things that we should know about these long-lived assets. So we include all assets associated with the acquisition of any long-lived asset and any additional costs related to getting that asset to its intended use. So we're going to include all the costs associated with that asset in the asset's acquisition cost or price. Okay. Cost of long-lived assets are not expense, so we will not expense them, but instead we are going to capitalize those costs and then allocate those costs later on into expense in another lesson. So we're going to do this under the backdrop of an example. So let me give you the example prompt. I know there's a lot of information, but we're going to go through each of these, in each of the information step by step so we understand how we get the number that we get at the very end of this lesson. So Company A is in need of a new equipment. They connect with a vendor who is willing to sell Company A the equipment they need for list price minus 10%. So they're going to get a 10% discount off the list price. Now, the list price of this equipment is $295,000, and Company A paid for the equipment in cash. So we're going to make it easy and simple. They're just going to pay it in cash. They're not paying $295,000. They're paying $295,000 minus a 10% discount. Now, Company A needs to get that equipment from that manufacturer to their site. To do so, they contacted Freight Services Inc. to transport their machine from their vendor to their manufacturing site. Freight Services Inc. invoices Company A for $6,350, which will be paid in 30 days. So no cash was exchanged here. So we're going to have to book a payable for the amount of $6,350. Then, due to the specialization of the equipment, an installer will have to come and be on hand to install the equipment and subsequently test the equipment to make sure it works. That cost was going to be $2,800, and we're going to pay that installer in cash. So the question becomes, how much costs will need to be capitalized, and what's the journal entry that is related to the acquisition of the equipment? So let's get started here by looking at this point by point. The first part here is we're going to look at just the cost of the equipment, or the initial cost of the equipment that we had to pay to the manufacturer. So if you remember, we paid $295,000 minus a 10% discount. So I'm going to break it down here in our calculation here. We're going to put here the list price. So the list price here is going to be $295,000. And then in addition to that, we're going to get a discount. Our discount here is 10%. So $295,000 times 10% gives us $29,500. So we're going to subtract that. And again, I could have just done that and then just used one line, but we want to break it down. That way you have kind of notes of how we calculated the end cost that we're going to capitalize into our books. All right, so that's what that looks like here for the initial purchase. We've got some other expenses to deal with. The first expense that we need to deal with is transporting that asset from our manufacturer to our facilities. To do that, we paid Freight Services Inc. $6,350. Since this cost is associated with that asset, we're going to add it to that asset. So to do so, we are going to add transportation expense. And that transportation expense here is $6,350. I shouldn't say expense. I should really just use cost. Transportation cost is $6,350. All right. So we're going to add that to the cost of the asset. All right. One more thing that we have to deal with is the installer. That installer costs us $2,800. So we're going to put installer and $2,800. So now we have a good picture of what the cost of the asset is. Now let's go ahead and add up and subtract all of those costs. And when we do that, we should get $274,650. So the acquisition of this asset is $274,650. It started with a list price of $295,000. We got a 10% discount of $29,500. So we'll subtract that from $295,000. However, we do have some costs associated with transporting that asset to our sites, as well as installing it to make sure that it's ready for its intended use. All of that being included gets us to $274,650. $2,794,650. Now that we have the cost, it's time to book the entry. So to book the entry here, the first thing that we need to first do is figure out how did we pay for this, all of these items. And so what I did here on the right-hand side is I've categorized all of our costs by how we paid them. So cash and accounts receivable. So our list price and our discount are technically cash when we put them together. And then installer was paid in cash. So we have those two. And then transportation was an accounts payable. So now we can book those first because those are the easiest. So cash goes out. And the amount of cash that went out would be $268,300. The way that I get $268,300 is I'm going to add the $295, subtract $29.5, and then add the $2,800. So we know that cash is an asset. A decrease in cash out of pocket would be a credit. So we're going to credit cash in the amount of $268,300. We also know that we included an accounts payable. Accounts payable is a liability. The liability is going up. As such, we're going to credit accounts payable for $6,350. Now that we have the payments out of our way, it's now time to figure out what that acquisition cost is and what do we do with it at the end of the day? How do we capitalize the cost of this equipment? So we know that our debit here is going to be $274,650 just because we can add up all of our credits, which should equal our debits. And we also know that we're capitalizing the cost. So our cost is $274,650. The question is what account is. What is the account? The account is going to be what it is. What's the long-lived asset? So in this case, it's equipment. So we're going to debit equipment. So when we acquire a long-lived asset, we literally just use what the asset is as our debit account. So equipment in this case would be the equipment that we acquired. The equipment would be a balance sheet account. It's an asset. The reason why it's an asset is because that's going to represent the cost that we've capitalized, that we've put into the asset column, and then we're going to expense over time. So we're going to debit equipment, which is now an asset, for $274,650, and then we're going to credit all of our payments or all of our cash outlay or all of our outlays for acquiring that equipment. So equipment will always and forever be an asset. We can also use things like land, building, property, plant, and equipment. So there's so many different ways that we can categorize these long-lived assets, and whatever way that we title them, that's going to be our asset for that particular long-lived tangible asset. Okay, so that's what our journal entry looks like. Now, one thing that we haven't talked about, but you might see happen, is we knew all of the given data up front. But what about if we are not giving it up front and we have to do multiple journal entries for all of these? So you're going to follow the same process. Instead of debiting transportation expense and crediting, we paid in accounts payable. So instead of debiting transportation expense for $6,350 and crediting accounts payable for $6,350, instead we're going to debit cost of goods. We're going to debit equipment for $6,350, and we're going to credit accounts payable for $6,350. For the installer, if we get that bill later on, we're going to debit the equipment for $2,800, and we're going to credit cash for $2,800. So normally we would maybe do repairs and installation expense, but remove the expense and replace it with the asset account. So in this case, equipment. Okay, so remove the expense, put the equipment, or put whatever type of long-lived asset you're trying to capitalize it to. So remember, capitalization, we're going to capitalize it to an asset account rather than expensing it. So if you have multiple, scenarios and you're going to have to, put those in your books, it's okay to do them three separate times. The only difference is instead of debiting the expense, debit the actual asset. So in this case, equipment. So that is a look at journalization of a long-lived asset using an example. It really is kind of simple. You got to figure out what costs go into the cost of the asset. And once you have that, we're going to always debit that asset and then credit our payment. Once we've got that, then we're ready to roll into the use of the asset. So that's a look at the acquisition of an asset and looking at the journal entry related to that acquisition. So I hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or clicking the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.